Hello, trust you all are doing great. My name is Blossom. I've been training ICT for a few years now, and I want to officially welcome every one of you to my space here. I'm sure it's going to be a very impactful one here on this particular channel because I'm going to be sharing my experience with ICT's concept and how I've been able to narrow down all the concept from everything to something that really works out for me. And basically, it's what I'm going to be sharing on a day to day basis. Anytime I upload the video here, it will be in line with a particular model, a particular strategy. So it's not that type of YouTube channel where it's talking about other blog today, talking about another strategy tomorrow entirely. That's not that type of YouTube channel. It's going to be focusing on what I personally use to trade. I'm sure it's going to be very insightful. So before we go into the video, I want to encourage you, if you can give a little push of faith, just hit that subscribe button because I'm very sure that you're going to have a nice time here and your trading is going to have a clear direction from here. All right, it's my first video and I'm on the charts already. Of course, that's what this channel is basically for. So glory to God, and I hope we'll get a whole lot of clarity from what I'll be sharing here. Okay, I already have a chart here. Here is EURUSD chart. This is a 1 hour time frame. I usually trade the intraday section, like session by session. We have London session, New York session, Asian session, but I basically focus on the London session because it's more convenient for me, and the only pair I focus on for now, and it has been good, it's Euro USD. So it's, if you are trading, I would advise you to just focus basically on only one pair. It will help you accelerate your growth that way and have a better understanding of what price is doing. So here's the 1 hour chart on Euro USD, since I'm trading in an intraday perspective. And what I'm going to be sharing here is daily buyers are good, weekly buyers are good. I use them with a whole lot of experience. I know how to position myself using the daily buyers, using the weekly buyers. I know how to frame all that into my intraday trading. So but what I'm going to be showing here is not going to be limited to whether you have daily buyers or weekly buyers or not. I'm just going to give you an understanding of what price is doing on the general range, because one thing you must know is that this market is fractal. What happens on the higher time frame is basically what happens on the lower time frame. So it's just for you to have an understanding of what the market is doing, and then you take advantage of it. All right, let me just tell you about this chart here. 1 hour time frame from Euro USD. The last candle here is the 2 a.m. candle. I basically focus on the 3 a.m. candle. You might be shocked to hear that, yeah, but that's just the candle I trade, the 3 a.m. candle. So this is the 2 a.m. candle right here. And once you look at this chart, what do you see? Okay, we have price pushing to the upside here. We had a wide gap here. What do we have here? This is a fair value gap, and I'm sure a whole lot of you coming to this channel know what a fair value gap is already, because I think a major part of people, of persons watching this video currently, are from the Telegram channel. I'll leave the link in the description of this video in case you want to join. I drop some insight there from time to time. So we have this fair value gap here, and after that, price started trading to the downside, creating sell side imbalance, buy side inefficiency, that's CB, and simply put, you can call it bearish fair value gap. Created one here, created another one here, and we had price just consolidating around it. That's what you just see. But if you look at it carefully, there is a story around this price, that here is 2 a.m. I'm going to be trading 3 a.m. So before 3 a.m. I should know what price is doing. At least I will come maybe few minutes to the closing of the 2 a.m. candle. I'll just come and check what the price has been doing. So I need to, and the things I look out for is where is price coming from, where's the behavior in price currently, and where is it likely to go. That's the information I need to come up with. So I'm just going to go to the next slide so you can have a clearer view of what I was looking at. All right, here we have this fair value gap here. If you observe this big fair value gap, we started trading through it, and if you carry your fib and measure the midpoint of this fair value gap, which is the consequent encroachment, you see that we are closing below it already, giving me a picture that okay, price is not willing to respect this fair value gap. We might have some push to the downside. And then we have this CB here, sell side imbalance, buy side inefficiency. After it was created with this candle, there was an attempt to go into it, went into it, traded to the consequent encroachment, but rejected it. And if you watch all this price delivery here, this price action, you saw that that price is not willing to go above this fair value gap. How do I know? Look at it. The wick are just once price trades into it, you see that it wicks down. The body are consistently closing below the lower portion of the fair value gap. That is very important for you to note. So at 2 a.m., we still had 2 a.m. candle went up, took out the previous candle's high, went as high as into this fair value gap, but still was unable to close above this fair value gap here. So at 3 a.m., in my mind, I already know that there's a willingness to go to the downside. And the next question that comes to my mind now is, if you are going to the downside, where is price likely going to come? At least for the short term, for that session, where is the possible place price might likely draw to? Then we have this swing low here. Very simple. This is how you frame your trades, and you must know this. I almost say this in all of my videos. Of course, I've been making videos for some times now. I've been making videos for students on the Telegram channel, and for some private engagements, I've been making videos. So in almost all my trading videos, I always tell students to the summary of this price is price have an intention. Any movement in price has an intention, and the intention is aimed at either going for a liquidity, which could be buy side or sell side, or is coming to trade into a fair value gap, which could be CB or BC. As simple as that statement is, that's the summary of price movement. If you can understand it with that perspective, it will give a little bit of clarity. It's going to be a whole lot. So we have this sell side liquidity just resting below here. So in the form of sell side liquidity, we have people, if anybody bought here, the stop loss will be here. So I have that in mind. So first of all, what I did now is that I know that price is getting the willingness, is likely to come to the downside. And the next step was to know where price will go. If we are going to be trading to the downside, then I should know where price is coming to on the downside. And if you can see, we have another low here, making this a relative equal low. It means we have some sell side liquidities resting below these lows here. All right, here is it marked out here. This slide is just to mark out the sell side liquidity, and I have another slide here. Is a bit zoomed in. So this is the early time frame I'm navigating around. So one thing you must note, once you have a week like this, like I'm coming for this sell side liquidity, I know where price is likely to draw to already, but there are levels I need to take note of. The first one, I have this week here, this discount week, like the lower portion of this candle, the 2 a.m. candle, the week, the downside. You see the upper portion of the week is this one up here. Yeah, this long one. But here is the lower portion. So I just got my fib, got the 50%. Very, very important. The aim is not for price to trade into it and start trading up. If price is coming to this sell side liquidity, then the consequent encroachment of wicks like this will be used as how do I call it now? Will be used as more like an anchor, something to support us to this sell side liquidity. That's it. So all right, here is it. The 3 a.m. candle. Let me go back a little. The 3 a.m. candle opened and just traded down to the sell side liquidity. So this was the business, the entire business for the 3 a.m. candle, but it might not really make a whole lot of sense now. So we need to go to the lower time frame, the 1 minute time frame, and then we see a whole lot. So all these here, the candles factored here are the 3 a.m. candle. So we have about 60 candles here. 60 minutes make 1 hour, right? So we have about 60 candles here, which are all the 3 a.m. candle. So if you look at this randomly, you might say price traded down, created a low, came up, created a high here, and traded back to this other block, started trading higher, and you may not really understand what is happening here. But if we put a little bit of details now and some levels on this chart, you get to understand that this price movement, price creating a high here, wasn't random. Price creating a low here wasn't random. This impulsive movement to the upside was not just a random move. So we have these levels here on the 1 hour time frame. So what I'm going to do now is to transpose those levels excuse me, is to transpose those levels to the 1 minute time frame. All right, now it's becoming a bit clearer. Now we have this high, price opened around here, traded up, gave us a swinger here, now traded into the consequent encroachment of that week, this particular week. That's the 2 a.m. The consequent encroachment of the discount week of the 2 a.m. candle. That's it here. Then for this swing, this is the consequent encroachment right here. So just note that. So price traded into it, found some support around it, and then pushed to the upside, taking out this buy side liquidity. Now trading down now, trade exactly to this level, the consequent encroachment of that 2 a.m. candle, and this is not random. So with this alone, you see that price movement is not random. ICT normally says there's an algorithm running this market, but if you don't see it for yourself, you may not know. Of course, that's a bold claim. Most of us came into this market with this idea of buying pressure, support and resistance, and all those retail logic. I think those retail logic are more like distraction. So I think I go with ICT with what I've seen over the past 4 years trading ICT, that price is not actually random, that there is an algorithm running this market. Because look at this precision, and this level was marked even before all this started happening. So you understand that feeling when you have a level marked and not just a random level. You have it marked and you see price just anchoring the low from it. It's not something random. I think I've seen situations where people come online and say once you put a random line on the chart, it will respect that there's no way price will, but this is not something that is done by logic. It is a logic that is repeated. Like you see it from time to time. You see it today, you see it tomorrow, you see it next tomorrow. Once you know what you are looking for and you look for it, definitely you'll see this every day on the chart. Every day within this time, 3 a.m. to 4 a.m. New York local time. All right, we had the move straight up, moved up to the upside. What is this level here? The fair value gap from the early time frame, and see where the high is formed. Price went up, created a wick, but was unable to close above the consequent encroachment of the fair value gap from the early time frame. And then that was where the push to the downside started happening. You saw that the order flow started shifting to the downside, and you can see that here. Traded up into the order block, moved down, took out the previous low, traded up again, moved down, and it was at this moment I really picked interest in price because this move was very impulsive, giving us a wide fair value gap here, and then seeing that this low is anchored on this particular week, it gives me a kind of idea that this low that created this swing from here to here is anchored on this fair value gap, and I see that the swing is failing on the 1 minute time frame already. So seeing all this happening here gives me an indication that this swing is failing What I mean by that is that price is going to trade below this low, and if it's going to trade below this low, within this 1 hour, I know that it's not going to be anchored. Like, it's not, I'm not seeing this level now as something that will stop price, because already it made an attempt to go higher and it's failing already. So seeing this falling this way, and the moment I discovered that this swing was not going to be sustained, then I'll be able to enter here, having it in mind that this level is not going to be a challenge. Price will not trade to it and trade through it and use it as a kind of catalyst to take us to the target here. And this red one here, that's the target. So this is what it will look like. That's the fair value gap here. The entry will be anchored on the fair value gap. Buy side liquidity taken out. You see price is fractal. So price went up, took out buy side liquidity, started moving to the downside, and then we have this fair value gap here. The movement to the sell side liquidity. Now this is what it will look like. Oh, of course, this is my first video, so I don't expect you to believe this immediately, but with time you see examples, you see live price delivery. Of course, I'll be doing live session here. You see price deliver live within this time, 3 a.m. to 4 a.m. New York local time. You see price deliver this way from time to time consistently. Maybe after you must have seen it for 3 months, I think that space is enough to convince you a little bit. But for now, like ICT will always say, don't take my word for it, don't take my claim for it. Just go to the chat, and whatever you understand from this video, make sure you, of course, let me not go into that. Whatever you understand from this video, just go try and apply it and see it for yourself. And of course, check around from time to time on the channel, subscribe, like the video, drop a comment. And like I said, it's not going to be a channel where I'll be making random videos. I'll be fixed on this particular model, on this particular way I trade, and I'm sure it's going to be a whole lot of experience. So just tell me what you think about this video in the comment section below. What do you think about this understanding in price? Of course, I've been postponing the making of videos for this channel for a very long time now. Now that the threshold, like the limitation, has been broken, well, let us begin. So all I need is your willingness to learn, and I'm sure you're going to learn a whole lot from here. Thank you, and I'll see you in the next video.